Hey guys, Sean here. So I recently bought more gold and silver at around 1940 and $25. What I have here is a beautiful Australian kangaroo which I picked up from a dealer and a tube of American silver eagles that I kind of managed to get for 10% above spot. Had a friend looking to liquidate some silver, so I kind of jumped on this one. I know many of you are still waiting on the sidelines hoping for gold to hit down below 1900 or even 1850 before you pull the trigger. And truth be told, it definitely could reach those levels, but how sure of that are we in today's crazy world? Now in this video, I really want to talk about why I decided to grab more gold and silver even though prices seem to be rather elevated now. I really believe that the level of uncertainty and randomness today is at an all-time high, and it looks like there's going to be a greater chance that we could hit into a world of more chaos. So we already know why we should be stacking gold and silver. We know it's a hedge against inflation and a store of wealth for the long term, but today I really want to touch on the big idea of uncertainty. I've been stacking for close to a decade and I don't believe I've seen so much randomness and uncertainty in the markets today. We are suffering from record levels of inflation, the war doesn't seem to be ending anytime soon, and I have a feeling this pullback on commodities might be just temporary. Now, if we look at the price of gold, it rises hard and spikes and then consolidates down, settling at a level higher than the previous one. My worry is that how far will gold rise amidst all this chaos and at what level will it eventually settle at? Will the new floor price of gold down the road be $1,900 or will it be $2,000? Right now, inflation has reached an incredible 40-year high of 7.9%, and that is even before we factor in the oil spike earlier this month. This means that inflation could rise even higher for the numbers in March, and this is my biggest worry. Inflation used to be the death by 1,000 cuts or boiling the frog alive. Those were the good old days of 2 to 3% inflation, but at 7.9%, that means if you have $10,000 today and you stayed in cash for the next 10 years, you would lose over half of your purchasing power. You need over $20,000 to equal what you have today, and that is insane. Now, there are talks about the Fed going to hike interest rates later this month, but I have a nasty feeling it won't be nearly enough. It will likely only be around 25 or maybe 50 basis points at max, which means an increase of 0.25 or 0.5% in interest rates. Now, to some, that might seem like progress, but that is still means that we are deep in negative interest rates territory. You are still bleeding if you sit in cash. Now, some banks are predicting that the Fed is likely going to raise rates 6 times to around 1.75%, but that won't be enough to fight anything, right? I think yes, gold and silver and other commodities might fall a little, but people will eventually realize they are still bleeding purchasing power every single year. But what I think this will affect is trigger the next stock market crash, which I am deadly afraid of. So this channel is about gold and silver, but I do have some money in equities. They are mainly dividend paying stocks or what people would call value stocks that have a solid business under them. Let me know if you want me to review my stock portfolio. If I get enough comments, I'll do a video on it. But anyways, in the past, I would channel the dividend income back into the stock, but now I am taking it out and putting it into gold and silver instead. And it's directly because of what the interest rate hikes can cause to companies. Right now, a lot of companies are holding debt at a very low interest rates accumulated over the last few years, and that's why we have seen such a boom in the stock market. But if rates rise, I think companies might actually have a tougher time borrowing cheap money to grow faster. And that's why right now we see lots of growth and tech companies crashing down to earth. Just take a look at Cathie Wood's ARK Innovation Fund that has lost almost 60% of its value in just 1 year. And if you zoom out, her investors have essentially lost 5 years of action while paying her management fees. Now, this is a very big worry I have when it comes to stocks and especially growth stocks. If interest rates soar, these companies in particular are going to be in pain. They won't be able to grow, their earnings are still up there in the air. There's nothing realistic for investors to hang on to, and that could mean investors might pull out. Guys, even Tesla is down by 36% this year. Now, what I like to do is to track the S&P 500 to gold ratio, which really gives me a gauge if gold is overpriced or if stocks are better. Right now, we see that there could be still more room for stocks to fall relative to gold. Now, a 1-to-1 ratio back in 2010 means that 1 ounce of gold will equal 1 share of the S&P 500. But will it reach there? I really don't know, but it does seem that momentum is building up for a crash in stocks relative to gold. Now, if you have been tracking the events of the Russia-Ukraine war, you probably already know that the US has sanctioned Russian banks, confiscated their assets, and we're talking about freezing their US dollar holdings, blocking them from selling their gold in the London Bullion market, and banning Russian oil. All this just adds to the level of fear and chaos in the market because we really won't know how things could backfire, right? I mean, we know in the long term it just erodes more trust on the dollar, but in the short term, could Putin strike back financially? There are so many things he can do, such as start pricing Russia's oil in gold, or maybe accelerate the dumping of the US dollar from their reserves or wealth fund. Who knows? But I think the most immediate uncertainty is how the war is going to play out. So Russia is winning ground in Ukraine and is now on the way to capture Kiev, but there seems to be conflicting narratives, right? On one hand, we are hearing reports of peace talks between Putin and Zelensky happening, but on the other hand, we have threats flying around from the United States about Russia potentially using chemical weapons in Ukraine and how this is potentially a game changer that could be crossing the red line and Russia paying a severe price. Now, what that means exactly, I don't know. Maybe it's additional sanctions, or it could finally be boots on the ground with NATO being dragged into the war. What I am afraid of is this situation suddenly escalating out of control. Now, right now, NATO is reinforcing their borders. Russia is doing missile strikes dangerously near Poland, and it seems like the region is just one accident away from causing the start of perhaps even a global war. What's more, we can see the United States warning China not to help Russia, whether that is providing military aid or helping them escape the financial sanctions. Now, I personally don't think China will be helping Russia directly, but this is pissing the Chinese off and backing Putin more into a corner, right? Now, I really think that China is going to start reassessing their plans of reuniting Taiwan. Xi Jinping has already stated that reunification with Taiwan is a mission of the CCP, and if they're going to do that, they now know that if they do invade Taiwan, they'll be hit with sanctions. I think China understands this crystal clear from recent events, and they will continue to stockpile gold as a reserve and as a final lifeline. I think we mustn't think that an invasion of Taiwan is an impossibility. China has also given a warning to any country that might support Taiwan's military. Now, all this just adds to the tension already building up in the region. Right now, I believe Russia will only accept a surrender under their terms, or they'll be pushing for a complete victory. Now, the sanctions have not stopped them, and after watching their economy get hit from multiple angles, I don't think they'll suddenly U-turn and call it quits at this point. Another concern I have is the high price of oil. Recently, oil spiked above $130 and is now hovering at around $100. The thing about gold and silver is that the majority of supply comes from mines. Yes, we hear stories about how precious metals recycling is picking up, but realistically, that is just a minority and isn't very impactful at all. Now, what is needed to dig up, process, and refine gold and silver from the ground? Oil. And a higher oil price just means that the mining cost of gold, which is the true floor price of gold, has just gone up. The same thing goes for silver, right? So Barrick Gold, one of the world's biggest mining companies, have stated that they foresee their all-in sustaining gold mining costs to increase up to $1,100. So that is the theoretical downside for gold, but honestly, do you think that the metal will fall to $1,100 in this climate? Right now, it seems that the price of oil won't be coming down anytime soon. The Saudis are refusing to pump more oil, and there's always the threat of Russia cutting off gas to Europe that could spike oil way above $130, right? And if that happens, not only will gold get more expensive, everything from food and gas to your Amazon deliveries will rise in price as well. And this is the biggest issue I have with sanction, and it's the unintended consequences as well as the domino effect it can unleash. There's always the possibility of Russia striking back financially. So far, they haven't really done it in a big way, but what if they do? That's why I'm really concerned about market unpredictability today. Now, I'm sure many of us have timed the markets before and warned you bought low and suddenly the price skyrocketed for something you predicted, or maybe it was just dumb luck. But after 10 years in the market, I can tell you that I'm done with playing that game. I'm now focused on the months and years down the line, and from what I'm seeing, I think there will be an eventual flight from the dollar once this war is wrapped up. Maybe not immediately, but eventually. In fact, because of all the instability of the Russian ruble and the possibility of a ruble default, there could be a scenario where we see the US dollar actually appreciate as a knee-jerk reaction, thanks to it still being the world's reserve currency and a perceived safe haven. It's weird calling the dollar a safe haven, I get it, but that's what the world at large still sees it as. But I believe central banks will start be thinking about holding too much US dollars or fiat currency in general, right? It doesn't make too much sense to hold much of a currency that can be weaponized against you and is suffering from a rather high inflation rate. 7.9% is not low, guys. And the next asset they can diversify to and without any counterparty risk will be to gold. Now, I don't think this will happen immediately, and they probably will wait for the war to end, as they won't want to upset the apple cart just yet. And this is why I am still continuing my monthly and quarterly gold and silver purchases. I believe the long-term prospects for precious metals is still strong, but in the short term, I can't predict anything. That is why I'm staying disciplined and buying the metals as part of my diversification. I already have my emergency stack. It's now about taking risks off the table, and that includes holding too much cash. So how should you stack during this period? I think this is going to be a really dangerous time if you're a lump sum investor. Just dropping tons of cash on gold and silver today is going to be really risky, and the price could just as easily rise or drop 10% tomorrow. I've always advocated dollar cost averaging your way in as a smarter move, because at least if a big spike happens, you can reassess and wait, or if a big price drop happens, at least you still have cash left to buy at a discount. You don't want to be too fearful as well as become a cowboy and start chasing prices. So ask yourself these questions. Do I have enough wealth outside of the financial system? If you don't, maybe it's time to start getting some precious metals, right? And do I have the holding power to hang on for years? I have to mention again that gold and silver is more about wealth preservation than a get-rich-quick scheme. Its purpose is to really preserve your purchasing power during times of crisis and high inflation, so that you can use your wealth down the road when you need it, right? It really doesn't make sense to buy today only to sell next week or even next month. In fact, I can guarantee you probably lose quite a bit on the physical premiums. Now, quick plug here. If you're looking to get some gold and silver in Singapore, I've links in the description below where you can save on physical bullion, plus a special deal that you don't want to miss. Right now, we are living in a time of total uncertainty coupled with brutal inflation that might not be fully controlled. It could be either a market crash down the road if the Fed over-calibrates and the market can't handle the shock, or inflation will continue to persist and slowly eat away at our purchasing power. But what's most worrying is that we are living in an era of black swan events. Every year seems to be bringing a new surprise, and not a pleasant kind, and there's no telling what will happen down the road. And this is why, no matter what, I will still continue to stack and hold some gold and silver. So there you have it, guys. Have you bought any gold and silver lately? Do you have an entry price where you're waiting to get in? Let me know in the comments below. Be sure to check out some deals in the description below. And if you enjoyed today's video, be sure to smash that like button and subscribe for more gold and silver videos. Thank you guys for watching, and I'll see you soon.